If an ETF shows a headline distribution rate near 7%, the tempting question is, how much income can I collect? For AMLP, a better first question is, what risk, upside, tax complexity, and price movement am I accepting in exchange for that payout? Today we are covering AMLP, the Illyrian MLP ETF, and whether that headline payout actually survives a real total return look. AMLP is an income-focused exchange-traded fund issued by MLP and Energy Infra. The fund is built around an options income approach, which can create large cash distributions, but also change the return profile in ways that are easy to miss if you only look at the headline rate. This video is for research and education only. It is not financial, investment, tax, legal, or personalized advice. I am not telling you to buy, sell, hold, avoid, or trade AMLP or any other security. High distribution ETFs can lose value, distributions can change, and tax treatment can be complex. Always read the current fund documents and consult qualified financial, investment, tax, and legal professionals before making decisions. Here is the validated snapshot as of August 17, 2026. NAV around $54.69 and market close around $54.69. Assets around $13,310 million. The same pack carries a launch reference near $32.43, so the video has to show two things at once. The fund has paid substantial cash distributions, and the price and NAV path moved down sharply from launch to the latest snapshot. The pack includes a latest distribution of about 103 cents per share, with an August 12, 2026 ex-date. At the current payment level, that annualizes to a run rate of about 7%, but a headline rate is not a promise. If payments shrink, the displayed rate changes. If NAV declines, the percentage can look larger even while the asset base shrinks. The safer reading is that a high number under a simple formula still has to be tested against payment history, NAV movement, tax character, fees, spread, and risk. The pack shows payments that have risen since the launch period. The first 4 paid distributions averaged about 72 cents per share. The latest 4 averaged about 102 cents per share. That is a genuine point in the fund's favor, though a rising payout is not a promise either. It should not be treated like a fixed coupon. Option premium, volatility, portfolio movement, and issuer decisions can all move distributions. And when a high distribution ETF is new, the early rate is especially unstable. Now put the payout beside the capital path. NAV moved up from roughly $32.43 at the launch reference to about $54.69 at the latest snapshot, roughly a 69% gain before considering cash distributions. Peak to trough, the drawdown reached about 21%. Here the asset value held up or grew alongside the distributions, but the same discipline applies. The payout still has to be judged against the total change in asset value, not taken in isolation. The pack includes a simple distribution-inclusive framing. Cash distributions since launch around $18.42 per share, and NAV gain of about 69%, and a simple distribution-inclusive result around positive 125% before precision adjustments. That frame is useful because it forces a total return mindset, but it is not a precise reinvested after-tax total return. Entry date, reinvestment. Exact purchase price, taxes, fees, and spreads all matter. The strategy connects to the underlying theme, but the options income overlay changes the shape of the exposure. Option premium can be attractive when volatility is high, but option strategies can cap upside, create path dependency, and underperform simple exposure during strong rallies. In a sell-off, the cash distribution may soften the experience but may not fully protect NAV. That is why AMLP has to be evaluated as a strategy, not just as a yield label. Before treating AMLP as an income tool, verify a few things. Read the current issuer page, prospectus, holdings, and strategy. Review the complete distribution history, not just the latest payment. Check the tax character of distributions after official reporting. Compare market price versus NAV and watch for premium or discount. Understand how the options strategy behaves in rallies, sell-offs, and sideways markets. And check expense ratio, liquidity, spread, volume, and whether the fund fits the account type and time horizon. If that sounds like a lot of work, that is the point. High distribution ETFs are not simple bank accounts. Time for the verdict. For MLP, the data-driven call is, Clean bill of health, total return holds up with distributions included, and the payout is steady. The basis, total return since launch with distributions included, plus 125%, price/NAV alone, plus 69%, payout trend, latest 4 distributions average 141% of the first 4 average. That verdict comes from the numbers you just saw, not from a vibe. Research only, not a recommendation. Verify current fund documents and consult qualified professionals before making decisions. 2 quick things before you go. If this teardown helped you see past the headline yield, hit the like button, it genuinely helps the channel. Subscribe so the next ETF autopsy lands in your feed. And drop a comment. Which ticker should we put on the table next, and where do you think the real risk is hiding? We read everyone. Thanks for watching.